Hey everyone, welcome to Financial Revelations. I'm your host, David Szafranski, coming to you from Avon, Ohio, the scene of a crime a couple of days ago. Big storm rolled through here. Corey grabbed us and said, "It says to get away from the window." So what did I do? I stood next to the windows, naturally. You can hear us every Thursday morning on WCRF 103.3 in Cleveland, and you can download the Moody Radio app and listen to us anywhere in the world. We once broadcast from the middle of the Amazon, so we're never out of touch, and you don't have to be either. So it's not like the old days where you had to be in front of a radio. You could listen on your computer, your phone, probably listen on your watch now. I don't know if you ever talk on the phone on your watch, but it's not that effective. So I'm hoping that the new Apple products that come out next month will improve on that. They're coming out with a really big watch that I'm excited about because I kind of love the Apple Watch, but I just don't like charging it all the time. And the latest version of the Apple Watch lasts about 2 days. But remember when you used to have to wind your watch? Well, you don't even have to do that anymore. So charging them, that's the one thing that I don't like about it. But I love tracking all my information. I don't know why, I just like it. So in any case, if you have questions for us, you can reach us you can email us, Corey@epsf.com. If you'd like to hear something specifically addressed, if you have a question about your specific situation, we would answer that here for you. And so I encourage you to send in your questions to Corey. We do take some questions that we get from the radio, and we'll answer those occasionally. And I get a ton of emails from people and answer those questions around. They tend to be very personal questions, so I can't really say, well, it's just kind of narrow. So, but if you have a question, email Corey. We'll try and answer it here on the podcast, or I'll answer the question personally via email. So I am getting a chance these days. Oh, one last thing before we get started. NativoSUSA.org. We're going to update that in the next couple of weeks from our last trip. They have a big project that they're going to start in the little town of Maués, Brazil. You can look it up and Google it. It's not much to look at. They don't have a movie theater there. There's not a lot there. There's shopping and things like that, but it's not mainly Chinese junk. But NativosUSA.org, all scrolling down here. And lately, I've been getting a chance to practice my money management skill set because the market has been rocky. It has been difficult at times, I'm sure, for individual investors to put your money to work in a market that is this rocky. And traditionally what happens to individual investors is they have the script flipped. When things get bad, like, you know what, I just can't take this anymore. And the longer it lasts, the more people start coming out of the market. And I'm not saying it's always wrong to come out of the market. It's not. But if you're a long-term investor, you really have to think about these things. Remember, the most individual investors flip this script where the market's bad and they get out. The market's good and they chase. Really what you want to do is you want to do the exact opposite. When the market's bad, you want to buy the best stuff that you can get that's down the most. So I think of some of the Magnificent Seven stocks, some manufacturing stocks, some consumer cyclicals that everybody would know their names, and they were on sale. They're still on sale, actually, but they were on sale 7, 8, 9% off, which, that's, and some even 10%. One of my favorite stocks was down over 10%. And what I do when I'm practicing my money management skills that I've honed over the last 30 some odd years, I know that sounds like a long time, but in this industry, it's not, because I could do this until I'm 144, which I think I might do. I'm only 45-ish now, so I have a long time. I have no plans to retire. In fact, I'm writing a book called The Sin of Retirement. So what would if I said, if I wrote the book and then retired, just retired. Now, I understand people change vocations and they change their focus in life, and sometimes they leave the workforce to build into grandkids or help kids raise kids. Sometimes they're raising kids. grandkids. I have a friend that's happening with right now. He just took custody of his grandchild. And that is a hard thing when it's not an easy thing for anybody, but that a lot of people retire for that. So when I see markets like this, when I see markets tumbling like this, I'm buying the things that I love the most that are down the worst. Great companies on really bad news really gets my money management spidey senses tingling. And I do have, like, I'm going to fake some antenna here, but I have antenna for a couple things: value, good value, and fraud. And so if you come to me with a fraud, I'm going to know it relatively quickly. I think, I haven't seen everything, of course, but I've seen a lot of fraud over the years. So I know what to look for. And for somebody who's been in the money management business for a long time, these things are not mysteries. Somebody was sitting in my office a couple of weeks ago and they told me what they were doing. I said, "You're never getting your money back." I said, "Well, why would you say that?" I said, "Because it's a fraud. And I know it's a fraud. And do me a favor, try and get your money back, see what they say." Couldn't get his money back. It was a fraud. So remember, we're not trying to do things that are out of the ordinary necessarily. We're just trying to buy good things and hold on to them for a long time. In fact, let's do this. Let's take a trip in the Wayback Machine. How far back are we going to go? Let's see. Let's go to the last great day leading into the worst market of your life. And that would have been Friday, October 12th. Guess the year. I'm going to give you a second. Guess the year. What did you say? Okay, it was 2007. Friday, October 12th, 2007. The Dow. So let's say you invested on that day. That was really the peak of the market before 2008 started to fall. And then it went into the Great Recession of 2008. And that happened. Lehman Brothers failed on September 15th, 2008. I was in the car. I was in Columbus. My wife was making me go shopping in Columbus. It was a Friday afternoon. And somebody on the radio said, on Monday, Lehman Brothers is going to go bankrupt. And I thought, that is so irresponsible to say. That is not going to happen. Little did I know, it had already happened, really. They gave up the ship on that Saturday, September 16th, and it was the die was cast. And I firmly believe now that if the government had known, if the Treasury Department had known what those dominoes were going to look like, Lehman Brothers would have never failed. Now, we can't allow banks to put us in a position to where we have to rescue them every time, but essentially that's what we're doing now. So let's say you put money in the market, all of your money in the market on Friday, October 12th, 2007. What was the Dow at? The Dow was at 14,000 and some change. The NASDAQ was at 2,800 and some change. And the S&P 500 was at 1,560 and some change. So if you had invested in really good companies, the worst possible time, into the worst market of your life, and you held it till today, you would have still made money. Think about this. You invested in the worst possible moment of the worst market of your life, and you still made money if you held that stuff till today. Why do I say that? Because today, when I walked in here to do this podcast, the Dow was at about 39,000 from 14,000. That's a big difference. The NASDAQ at 16,600. Huge difference. The S&P 500 at 5,300. These are the largest 500 companies in the market, have grown that much over these times. So what do? How do you invest into things like this? The best investors, the Warren Buffetts. Now, Warren Buffett, and I know this is probably going to be seen as heresy, but Warren Buffett obviously is a good investor, but he's not the greatest investor of all time. He missed the technology move for 15 years, or maybe 12 years. And then he finally bought some Apple. But he missed a lot of that move. He underperformed for a long time. He just didn't. He didn't want to buy things he didn't understand. So he didn't buy the Microsofts and the Apples of the world, or the Microns and things like that. He missed all that move. Well, not all of it, but he missed a lot of it. So for a while, Berkshire was not really very investable for me. Now, I love Warren Buffett's philosophy. They put him on CNBC way too much. They don't as much anymore, but they would put him on and he would talk his book for 3 hours. And, that's okay. We've owned Berkshire over time. I still own some of it. So if you invested in the worst possible time into the worst market of your lifetime, of my lifetime, 2008 was nearly a Great Depression. We were really close to going into a Great Depression. You remember how bad the market was in 2000? Maybe you don't, but I do, because I would get the Wall Street Journal at my house. I stopped picking it up in the morning. On my way to work, I'd grab it and I'd throw it right in the trash can, because I knew there was going to be no good news there. I had to figure out, these stories were great. Oh, look at how bad everything is. But I had to figure out a way to stop the bleeding and make some money in this. And that's what we did. So, our stocks were down just like everybody else's stocks. And a couple people made me sell, but if you didn't make me sell, I wasn't going to do it. So think about that when you're looking at these times. It's rocky. We have politics. We have the Fed. We have Chair Powell is involved. Like always, he's very involved in the market right now. In fact, the next Fed meeting, which is in September, there's a lot of pressure on them to cut rates. And they may just do it. I think they may start a rate cut regime in September. Now, I got to be honest with you. I think they would much rather wait until November to cut rates, because then it's not going to look political, but the pressure is growing. Every bad jobs report. We had a jobs report last week where they restated 11 jobs reports previous, to the tune of there's 1.2 million less jobs than they reported. It's funny how they never revise these things upward. I've never seen, well, maybe I have, but I haven't seen it in this administration. I have not seen them say, oh, we undershot jobs. No, they're juicing the numbers, reporting those numbers, and then they revise it. You read about it on page 27, section D. Well, that's one of the reasons why the market sold off, because the jobs report, albeit it's one data point, but they restated the previous 11 data points. So that one wasn't just one data point. That was many data points. So the Fed is going to be under pressure to cut rates in September. I think they really want to wait till November. If the market stabilizes and the data stabilizes, I think they wait. My preference would be that they wait. I don't want it to look political and the conspiracy theories that come out of it. And, I think Chair Powell messed up. I think he started too late. I think that put him in a box. I think a lot of the language that they use put him in a box. I think the spending that has happened with the federal government has put him in a box. Everything they do is basically boxed him in a corner. And he says they like to talk about the soft landing, but when inflation went up as high as it did and stayed there, that's not a soft landing. In fact, and I've been saying this for a while, but in the Journal today, there's an opinion piece that talks about, well, who won in inflation? People who own assets. If you own stocks, bonds, mutual funds, houses, rental properties, 401ks, you won. Your assets got inflated. If you don't own those things, and most people who are on the economic margins, they don't own those things, they're getting killed financially. They're getting killed financially. The only way to beat this now, because we can't deflate the economy. We're not going to do that. That's as bad as inflation, just in a different direction. But it hurts people just as worse. It hurts people with assets. Those people vote. So politicians are not going to do that. The only way to beat inflation now is to get incomes up past where inflation grew to. So you're going to get the rate of growth in inflation down. That's what the Fed's trying to do. They're getting closer, but they're not there yet. We're willing to accept a 2% inflation rate. We got to get incomes growing by 7%. How do you do that? You make energy cheap. You put the energy complex back to work. You pare back on the new Green Deal. You cut taxes where possible. You cut spending. These are the things that you got to do. We cannot spend like we're spending right now. It's physically impossible. We're going to take in more tax receipts in this year than ever before in history, and we're running a $2 trillion deficit. These things are impossible. We cannot do it. Okay? So I think the Fed prefers to wait till November. They might not be able to. And of course, we still have, within the market and the Fed, we've got a presidential race. And just the politics of the situation, Joe Biden removing himself, Donald Trump almost getting assassinated. And I still think the presidential race is still on pace to be won by Donald J. Trump. That's my opinion. Kamala Harris, well, what we have now is we have a vice president nominee, Tim Walz, who is a left-wing nut job, running alongside of a left-wing moron DEI hire, who 1 month ago, the Democrats were trying to push off the ticket. And that's true. They were trying to push her off the ticket because she is so unpopular with people. Now, the press is, we talked about this last week, they're whitewashing her record and the things that she said, things that she hasn't done. And you should expect this. When people act surprised that the press is in the bag for the left wing, I don't know why. Of course they are. I don't know why they are. I don't get it. Maybe I'll never get it, but I don't know why they are, but they are. And at some point, she's going to have to talk. She's going to either debate or she's going to give an interview, and she doesn't do very well because she's not really ready for this show. And that's okay. A lot of people aren't. A lot of people are not qualified to be president. It's not a slight. She's not qualified to be president. I don't think she will. Now, I want to share with you some final words before I go. I have these two dogs, TJ and Max, and I like to talk to them, and they listen to me. They look me right in the eye. Of course, I am holding a treat while I'm talking to them. And I think everybody needs to hear these 4 things, whether you're TJ and Max, or you're my kids, or soon to be grandkids. I'm going to be a grandpa. I'm going to be the youngest grandpa of all time. I know it's crazy, but we need to share these words with people. We need to tell them these things. They need to have the confidence. The first thing is, I believe in you, and I believe in TJ and Max. I trust you. I'll always love you no matter what. And the 4th and last thing that everybody needs to hear, especially TJ and Max, is that socialism will never work, no matter how often it's tried. I am David Szafranski, a real American, a true, red-blooded, gun-loving patriot, and the voice you can trust.